Hello, everyone. Thanks for tuning in to the Industry Insider series. I'm Christine, and I'll be your host for today. Joining us, we have Melissa Rand. Melissa is Head of Community at Airtree Ventures, one of Australia's largest venture capitalist funds. In 2020, she was named one of the most influential Asian Australians under 40. She undertook both a Bachelor of Commerce majoring in finance and a Master's in Commerce majoring in marketing, as well as a degree in law at the University of New South Wales. Please welcome Melissa.
Thanks, Christine. Great to be here.
Thank you for coming. So I guess we'll just start off, with a question in regards to some background information about yourself, for example, your high school through to uni and beyond, and how you made it where you are today.
Yes, absolutely. I've been in the workforce about 10 years now, so that might be a long story, but I will keep it brief. So for high school, I went to St. George Girls from year 7. And then the last 2 years, I went to James Roos. And it is true what they say in James Roos, everybody gets above 99 UAI is what we used to call it. I think now it's called the ATAR, right? So people would only give the point. So if they say, 0.55, it means they got 99.55. It's true. And so most of my cohort at James Roos, they have 2 choices in their career or in their degree, either medicine or commerce law. Okay, so I knew I didn't want to be a doctor, so I did commerce law. Not the most inspiring story. But throughout, my time at university, I very quickly discovered that I had a real passion for entrepreneurship, the idea of creating something from nothing, and even the things that you do in marketing, creating content, creating perception, communicating, and inspiring people. So these are the things that interested me, and I'm very fortunate that doing a double degree meant that I had 5 years to really discover myself and to get involved in a lot of different uni societies. So I was particularly involved in YEC. I don't know if people are still familiar with it.
I'm part of YEC.
Oh, really? Okay, wow. Yes, so I used to be ICX director. Yes, I used to be the sales director. Yeah, and that really starts my whole philosophy around leadership and social impact and entrepreneurship. Yeah. So anyway, so I was doing a finance degree and a law degree, and I didn't want to be a lawyer and I didn't want to be a banker. So what am I going to do? It was really great that when I graduated, it was right around the global financial crisis. So there weren't any banking jobs if I wanted it anyway, right? So I'm like, yes, I'll just go to my marketing degree like I've always wanted to. And so I did that. And as I was doing that, I actually got a graduate job in sales at Procter & Gamble. So they are one of the world's largest fast-moving consumer goods company, right? Everybody has Procter & Gamble products in your home, shampoo, Oral-B, Vicks as well. So we're in pharmacies a lot. So so that was my graduate job. And it's quite a privilege to work at such a renowned company for marketing, for leadership development. But by the time I got to Procter & Gamble, I already knew, because I had been in uni doing startup and entrepreneurship things for a while. I really knew that ultimately I wanted to get into the startup tech sector. I wanted to sort of work with more entrepreneurial people. But it wasn't very clear how I was going to do that working, at Procter & Gamble. So I decided that the fastest way to build the career that I want is to just do it myself. I started a software business on the side. And through doing that, I learned everything I knew about startups, made all the newbie mistakes, and then met a lot of really great people also in the startup sector in Australia at that time. So this was in 2011, 2012. And that's what led me to meeting my next boss, so Joshua Flannery at UNSW. At that time, they were just looking at starting an accelerator, a tech startup accelerator out of a university, experimenting with, is it possible for universities to add value to their students and alumni who are interested in entrepreneurship? So I was very lucky. I was the first person that Josh hired to help him build out that program. And now the UNSW Founders Program, is very well renowned, and the team has probably like 20 plus people by the time I left 2 years ago. So that's how I really got into the sector. And then after that role, I was the global partnerships manager for a blockchain developer community. And then after that, I came to my role at Airtree Ventures. Yeah.
Wow, what an extensive, what a journey, to be honest.
Yes.
Went from St. George Girls, James Drews, then
yeah.
oh wow.
It's just the pattern is just, as I get to a new platform, I think about what else I'm interested in and I go for the new thing. Yeah.
That's amazing.
Yeah, and now it's a real dream job that I get to have, where it's a big platform, to really inspire all startup founders in the Australia and New Zealand region. And yeah, I really grew up in my career in this sector. So it's 8 years. No. So I started my business in 2011. Yeah. So it's 2021. So 10 years of actually being in the tech startup sector. And actually, this is the only industry that I know. So I can't even get hired in a corporate job if I wanted to.
Oh my gosh, that's amazing. And now that you've mentioned, Airtree, I just was thinking a good, follow-up question would be to explain what venture capitalists are and how do they compare to angel investors?
Yeah. Okay, so venture capital, fancy word, all it means is we provide funding or provide money, right, to people trying to build businesses in fast-growing tech categories. So it's more uncertain, riskier than ordinary businesses with a certain cash flow, but the potential for growth, the potential to change the world is much, much greater. So it's sort of like a high risk but high reward category of capital. That's why it's called venture capital and not in the traditional finance sectors. And so at the core of it, it's the venture capitalist gives money to the founder, and in return, the founder gives us a proportion equity in their business. So essentially, we become business partners, right? We're going to be working together, co-owning this business going forward. But of course, we have a very minority stake. But the best venture capitalists definitely add a lot more than just money, right? So we seek to provide support and very practical help and networks that will help this business go from 0 to 1, help this business grow into a global success story. And on your point of what's the difference between venture capitalists and angel investors, so through a venture funding or a fundraising journey, depending on what stage you are at, there are different names for sort of the category of founders or investors within that. So angel investors typically refer to the very first round for a business at smaller check sizes. And then you sort of then move on to seed, and then the venture capital VC, and then the private equity as you grow, and then public markets listing. So that's sort of the broad categories. But now, I think everybody is sort of playing along that spectrum. So certainly at Airtree, we seek to be the first check for founders, even though our first check size is around $200,000 and it goes all the way up to multiples of millions. But you will find that, because there's a lot more activity, a lot more funding available, that the sizes of funding rounds is increasing. And so typically it's very normal. Now we're seeing a lot where startups are raising for the very first round and they're doing $1 million round or multi-million-dollar round. So a 200,000 check is very appropriate in that situation. Yeah.
Wow. So if a business, say, needs a certain amount of money quickly, say 200K, just sign the check and there you go.
Well, I mean, quickly. So that's a whole other issue, right? So as I mentioned, the venture funding way of working together is you are getting into business together. It is for the long haul because we are joint owners, right? One part minority owner of the business. So the founder, of course, has to feel very comfortable who they're bringing on board. This isn't like applying for a credit card, or applying for a loan with a bank. So it's a two-way street. The founder has to feel comfortable with the investor, what we bring to the table, what value can we add, and do they feel from an integrity, from a values point of view, are they comfortable working with us? So we definitely seek to move very fast. Founders move very fast. Their businesses need funding fast. But I wouldn't think of us as the get money quick option. This is a very serious and important, significant decision for your business. So get started early. So approach us as early as possible and give us time to build that relationship and get to know each other. Yeah, it's just like dating. You don't get married on your first date. So.
Exactly. It's like a long-term thing.
Yes, exactly. Yes. Yeah.
Wow. Well, thank you for that. Now I was thinking maybe you could explain sort of the role venture capitalists will play in developing the entrepreneurial ecosystem in Australia, like what it's done currently and where you think it will be going in the future.
Yeah, absolutely. So obviously, when you provide funding for a startup, the startup is then able to go spend the money, hire people, right? Build their product, spend on marketing. So without funding, many businesses that has a capital heavy structure in the beginning of their business isn't actually able to grow or make the big impact that they want to. So that's the core function of getting capital, right? In terms of the venture capital industry in Australia, so we've really come a long way, and it's been a very fast period of growth. So even back in 2012, Blackbird started their first fund of 30 million, and then Airtree started our first fund as Airtree, 40 million. Not 40, 60 million, sorry, 60 million. And so that's the kind of numbers of venture capital funds. All right. Cut to today, Blackbird, us, Square Peg, we're all running funds that, individual funds that's close to $500 million, or funds that's combined together in the $500 million category. And definitely the $500 million to $1 billion level is now, where people looking at raising new funds, it's quite possible now. So what that has done is, in terms of startup growth and startups success, we went from probably just a handful of businesses over 100 million valuation 10, 15 years ago, to now at Airtree, we do a infographic where we try to track some of the most notable $100 million companies and plus. We're getting to close to 100, over 100 of businesses that would be valued that way. And 100%, we have a lot more in the pipeline. Businesses are growing faster and there are more of them. So it's a great time for the industry. It's a great time for startups and for working in startups.
Wow. So would you say most of the startups you've been investing in would be technology based?
Yes, they are 100% technology based. So in venture capital, and in particular for Airtree, we invest in fast growing technology businesses. So it has to have a technology element that makes it innovative, that's different from traditional, say, restaurants, a service-based business like an accounting firm. So it has to have a tech element, software, hardware. That's like the core of what makes a venture capital as opposed to any other investment.
Yeah, it's sort of driving, the future of,
yes.
The workforce. And it's amazing. So I was just wondering if you would mind discussing one of your recent investments into Delegate Connect and how that's sort of going for you guys.
Yep. I posted about this on LinkedIn. I'm very excited about our investment in Delegate Connect because I'm a community professional, right? So I do a lot of events. So whenever there's a product that we can invest in that I personally can see the value and can use, it's always very exciting. So with Delegate Connect, I believe our investment team reached out to them when we saw some of the great work that they were doing. And so often that relationship starts like this. Either the founder finds us when they're looking for funding, or we find the founder to want to find out more about what they do because it seems impressive. And so from there, I think, as I said, that dating process, right? My colleague who leads our relationship with Delegate Connect, Richard Ling, he actually wrote a blog post as well about why he's excited about our partnership with Delegate Connect. So obviously they got to know each other, and both sides felt like there was a very strong fit of what value we can add to each other. Certainly what the founding team, Jordan at Delegate Connect, feel that we can add. So that's how we came to invest. And it was recently announced. So we're excited about it.
Wow. So what has Delegate Connect sort of been like? What made you guys interested in what they were doing?
So I'll share the link of Richard's blog post. So that names it in detail, but a very top level, founder product fit and product market fit and traction. So founder product fit, Jordan and his team has been in the events industry for 20 plus years. And so they knew the issues that the industry were facing. And so they started developing a solution. And the next part is the traction. So they already have a lot of customer relationships. And when the customers saw their solution, they thought this was different to what they've seen other people do. And so a lot of them got on board, and they're very excited in using the product. So that's really a sign that you have something special.
Exactly, especially when they're filling a hole in the market.
Yeah, that's right. Exactly.
That people need.
I mean, the nuanced part of it is that it might be obvious for people to go, well, yeah, of course there's a need, right? But the trick is you have to build a product that actually solves that need, and that it's really easy for your customers to use and really customized to your own customer segment, what they need. And so they focus on the large scale conferences, especially in the medical and other sort of very professionalized industries. So a lot of the functionality is specifically for those industries. That's why they've been getting such great uptake. Yeah.
Wow, very impressive stuff. Now I was just wondering, this is probably a very controversial question, but has there been much, tension between all the VC firms in Australia?
So I would say we're very lucky to be in an industry that is very collegial and supportive. So the whole startup sector as a whole, I would say, is like that. The philosophy of helping each other, helping everybody else get strong together as an industry, paying it forward, founders who made it, right? Supporting other founders. So that kind of very wonderful culture and supportive good vibes is very normal in the startup sector. And so I would say, that is definitely how we treat our VC peers. As I mentioned, right, we are an industry that has undergone a lot of growth. So it means that when we first started, all of us were, very new and not really believed in, I guess, right? So like in the traditional finance world was really looking at us going, oh, I wonder, what's it going to be? So the growth of the sector is all of us working together to make our whole sector great. So it's definitely very supportive. Now within that, as the industry have grown, of course, there's natural competition between, are you going to which fund are you going to choose? So in that context, I think my personal philosophy and certainly how Airtree approaches it is we know who we are and the unique values and integrity that we stand for. So we just want to showcase that to founders. If it's a great fit, great. If it's not, then all the best of luck to them. Our other peers are also fantastic, So we don't have anything bad to say about them. I hope they don't have anything bad to say about us, but we just made the best person win, right? It's like great sportsmanship. So far that's not been an issue. And I would say that's the same experience I have had working in my previous role, say at UNSW, right? Our accelerator going up against UTS or UCID, what does that feel like? It doesn't feel like much of anything. We just all do great work. And you might sometimes have a bit of, oh, they got in the news and, oh, we want to get in the news. But that's just natural. I think it's very positive and good competition that keeps everyone on their toes and makes sure that we're all improving ourselves for the betterment of our founders and startup sector.
Wow, I really love how you described it, how this community, especially startups and the entrepreneurial community, is very tiny, and they just, want to see small and small to medium businesses actually, get somewhere and,
Definitely.
really improve. That's honestly amazing. I was just wondering how, first of all, how can students, get involved in sort of starting off their entrepreneurial, journey?
Absolutely. So my personal experience has been joining student societies, and you are a student group. So, join your group, join other groups. And so first is just get into the right community to find the like-minded people, right? So all of you are learning together. And then the next advice is learn by doing. You of course, reading is great, learning from other people's experience, but you don't actually learn until you do it. And in this day and age, there is nothing stopping you from starting a startup, starting a business, starting a community, starting a podcast, a content series, right? You just go and do it. And as you're doing it, you're going to learn so much about this industry. You're going to showcase your unique capabilities and your viewpoints. And that will help you get get your foot in the door, working for a startup or, starting a business and building a community and a customer base around it. So I think you're personally, getting involved, you're doing all the right things. So all you need is just time and persistence. Okay. Don't get, discouraged or intimidated when you hear from someone like me talk about everything I've done. I've had 10 years to do what I've had done, right? So don't compare your first step to my 1,000th step. You're doing all the right things. In 10 years, you're going to be achieving, bigger things than I have.
Wow, I can honestly, relate to what you're saying, because a few years ago, a few friends and I had actually won a business competition. And like, we just thought, like, once we had won it, like, this is going to be too hard. So, we held it off. And then actually this year, ISEC was holding a pitch competition. And I thought, previously I didn't get to, make that business, become a reality. So maybe now I should, put my passion towards something I really want. And we ended up, going up against all the universities in the country and we won that competition with a different business idea. Which currently we're actually trying to we're looking towards an app that tries and reduces food waste, because we thought that's a huge issue, and it's a sustainable development goal that we want to sort of achieve, especially with a lot of households throwing out food that's perfectly normal, or they forgot about it. So we thought tracking using this app to track expiry dates and give them updates and reminders about their food would be a good way, and possibly partnering with one of the food chains to connect rewards programs would be a good idea. But we're sort of working towards making that a reality by upskilling ourselves before we can even look at venture capitalists or investors.
I think certainly there's a lot to do without needing money. So my advice for founders is always, how far can you take the business without taking external funding? Because as I mentioned with Delegate Connect, right, traction, we were the first round that they did, but prior to that, they've already demonstrated that they were able to build a product and that they had customers, right? So using whatever resources you already have, how far can you take it? How much can you demonstrate that this idea is going to work?
Wow. Well, that sort of concludes today. And I just wanted to say, thank you for joining us. And I really appreciate you taking the time to delve into your experiences and expertise in the entrepreneurial field. And honestly, this was very informative, and I really enjoyed learning about everything you had to say. And it's really valuable to, young people like me of today.
You're very welcome. Anytime.